In this module, we zoom out from today's rules and ask a bigger question. What happens when money itself becomes tokenized? You'll see what CBDCs and tokenized deposits are, how they might reshape AML and travel rule duties, and where VASPs like NovaX and intermediaries like Finbridge could fit or potentially disappear. Think of money as a stack of technologies and risk profiles. At the base, cash is anonymous and hard to trace, so regulators worry most about money laundering there. Bank deposits sit above that, fully identity-linked, but dependent on intermediaries and legacy rails. Next, stablecoins add always-on, cross-platform liquidity, but introduce new risks around issuers and reserves. At the top, CBDCs and tokenized deposits aim for programmable money with strong oversight. As you move up this stack, the controls get tighter and regulatory expectations steadily increase. Any digital currency design quietly locks in its compliance reality through three big choices. First, who is it for? Wholesale banks settling with each other, or everyday users holding digital cash? That alone changes which laws apply and which regulators you deal with. Second, is it account-based or token-based? Account systems lean heavily on identity and onboarding. Token systems lean more on cryptography, traceability, and analytics. Third, who owns the user relationship? A central platform or intermediaries who manage interfaces, KYC, and the day-to-day compliance work? CBDCs, tokenized deposits, and stablecoins are three distinct flavors of digital money, with different compliance consequences. CBDCs are direct claims on a central bank, with strong identity and access controls embedded in the core ledger. Tokenized deposits are commercial bank money wrapped in smart contracts, so existing bank AML rules and travel rule duties follow the funds inside the protocol. Stablecoins sit furthest from regulators' core systems, so VASPs must provide most of the monitoring, screening, and travel rule controls at the edges where users interact. As money becomes programmable, the question, who does compliance, starts to shift. Instead of every VASP and bank building a full stack of KYC and travel rule controls, more of that work can move into shared utilities or even the core payment infrastructure. Central banks or payment networks might embed identity rails and screening tools, while exchanges like NovaX focus on higher-level risk monitoring, complex cases, and customer behavior. Your role gradually moves from doing everything in-house to orchestrating controls across a wider ecosystem. There are three main ways AML and travel rule responsibilities can be organized. One option is a centralized KYC utility. Many institutions plug into a shared hub that holds customer data and distributes checks via APIs. Another is the intermediated model, like Finbridge. A trusted player sits in the middle, performing AML checks and travel rule obligations on behalf of partners. The third is the VASP-focused model, like NovaX. Each VASP runs its own AML stack and travel rule messaging, coordinating directly with other VASPs and institutions. Now introduce the idea of a unified wallet. One interface where users hold fiat, stablecoins, and even a retail CBDC and move between them instantly. The magic sits in the architecture. Compliance is standardized in the backend with consistent KYC screening and monitoring, while the front end hides this complexity from users. Finbridge's role is to act as the regulated bridge that connects all these rails and keeps the controls aligned. As NovaX grows, it stops being just a crypto exchange and becomes a hub connecting fiat rails, crypto rails, tokenized deposits, and eventually CBDC rails. For compliance, that drives two major shifts. Visibility has to extend across all of these asset types so you can trace funds as they jump between rails. And the travel rule can't stay tied to one technology label. It has to follow the underlying value, adapting to layering risks across both crypto and tokenized money. Finbridge's superpower is not only adding crypto access, it's acting as a compliant bridge between old and new rails. On one side, it speaks the language of banks and, over time, CBDCs. On the other, it connects into NovaX and other VASPs through standardized APIs. The value sits in the middle, a regulated front door, unified policies, and pre-agreed data sharing and travel rule arrangements. That structure lets partners innovate on products and crypto services, while Finbridge absorbs most of the regulatory and interoperability complexity. Programmable money is more than a tech upgrade, it's a strategy shift. NovaX concentrates on the market-facing rails, adding CBDC and tokenized deposit support, extending travel rule coverage into these new channels, and joining pilot sandboxes to help shape standards early. FinBridge concentrates on plumbing and policy, integrating CBDCs into core systems, writing one unified policy across cards, bank transfers, and tokens, and sharing KYC utilities with partners. Together, moves like these position both firms as trusted gatekeepers in a programmable money ecosystem. We are moving toward a world where money, data, and identity all sit on multiple rails at once. Traditional finance brings stability, controls, and bank-grade processes. Web3 and crypto bring programmability, new asset types, and always-on markets. Regulators add the public interest frame, financial integrity, consumer protection, and systemic safety. Your task is to help these three worlds interoperate. Aim for one holistic governance model for digital value rather than separate rulebooks for fiat, tokens, and CBDCs. To turn this course into action, focus on 3 steps. First, map your business. List every way value moves in and out, and note which AML, travel rule, MiCA, or VASP rules touch each flow today and over the next 2 years. Second, plan upgrades. Identify 1 or 2 systems or processes that most constrain compliance, and prioritize fixing those first. Third, engage externally. Join at least one industry group, sandbox, or consultation where these rules are evolving, so you can influence and prepare for what comes next.